Hello and welcome, friends, fellow traders, and investors. My name is Lloyd Logan Boucher from On Point Stocks and Options Trading. You can all call me Logan, and this is your weekend market prep video. Well, an exciting week. We just finished the elections. I took the week off trading, as I'm sure many people did, and for good reason. Unpredictable volatility. Who really knows what's going to happen when elections come around? But I will admit it did not go as I expected. So let's quickly discuss this and figure if we can get a little insights as to what happened and why. So first of all, the actual results, I guess, are not in yet. It looks like Biden has won, and I'm sure there's going to be some contested states in there. But I doubt anything's going to change. So we're going to assume that it's a Democratic victory, and it looks like they maybe got the House, but not the Senate. And that's probably expected. Now, if they get the Senate, then there's going to be some real problems, and you can expect some major tax reform, and that's going to be negative for the market. But the reason why, in my opinion, the market is rallying or at least holding off of this Democratic win is because of the monetary stimulus that they're likely going to impose, push forward. And so money buys markets, let's just say that. And the more money that's in the economy, the more that markets will rally. It's just a proven fact time and time again. If you look back at the Japanese stock market going back 30 years, every time they did rounds of monetary stimulus, the stock market would rally. It took more and more and more stimulus every time. Well, this time they're talking about a $3 trillion stimulus package. Now, compare that back to 2009 when President Obama took office, and the first round of stimulus they announced from the Federal Reserve at that time was only $600 billion. It had basically no effect until they got it up around 1.2, 2.2 trillion. Then it got major market effects. Well, doing around a 3 trillion in stimulus will definitely fuel this market higher. It's really kind of like throwing gasoline on a fire with the debt crisis that's going on already. And in terms of trading, though, we just got to trade whatever's going to happen in the markets. So remember, if they push through the higher corporate tax rates, I think he says he's going to raise it 8 points now. They're talking about. If they raise the tax rates, corporate tax rates 8 points, that's going to be negative for the economy, negative for the markets. If they cut or if they raise people's taxes or they cut current tax, if they let expire current tax cuts from the Trump administration, that's going to be negative for the markets. But then all this stimulus is a positive for the markets. So it's again kind of a wish-wash. We don't know what direction it's going to go. At least with Trump, we knew exactly what direction it was going to go. He was coming in off massive stimulus from the prior administration and was going to cut taxes and pro-growth kind of mentality, which is all good for markets. So this is where we're at. As we can see on the charts, looking at the major indexes began pushing up even before the elections and kind of continued through the elections, and it's now holding at resistance right here on this downward trend line we got on the S&P, on the Nasdaq as well, and on the Dow Jones. Of course, on the Russell, it's just been in a continual nice little uptrending wedge here, which is kind of surprising. It's been holding in levels and rallying back up. So as it is right now, we know we're in some resistance. The index, the Nasdaq, slightly above. What will happen next? We don't know for sure. Anything could change. But we just got to trade the chart, and we know that we're kind of high on the chart. So what do we expect? I would expect some form of pullback. Now, I will show some favorite chart picks for setups going for the week ahead here. And I'm going to be honest, I'm not all that confident at them because where the market is located today, the indexes would tell us that we're likely getting consolidation or a pullback, and that's not going to work well for long positions, which in this case, they're all long just because it's hard to fight an uptrending market and you have to look at the bias. The bias is up. So we'll take a look at those in just a second, but let's go through our regular routine. First of all, I want to take a look at the index comparison chart, and we can see that the Nasdaq's currently up. Let me just make sure this is the correct date. 1020. Nope. There we go. Just had to reset the time expiration. It's running from the beginning of the year. So up to current date, the Nasdaq is up 30.83% and the S&P 7.2. Dow and the Russell again trailing the other markets down 1.36 on average. So kind of lagging a little bit, though the rest has been looking stronger with industrials and miners picking up, but still lagging the other markets. Take a look at our index comparison charts or Excels. This is basically showing us the flow of money and kind of a couple interesting things going on here. We can still see that the energy sector is weak, but we now see that the consumer discretionaries and tech has picked up a little, but really they're not outperforming the other indexes. Same thing with financials, the other not indexes, apologize, the other sectors. Same thing with financials. They're picking up but not outperforming yet. It's basically utilities that's outperforming. Healthcare is starting to outperform. We got basic material and we got industrials, which are really starting to pick up again. So it's really kind of the buying is concentrated probably more so in the small cap and then just a few of the big tech companies, which is driving the Nasdaq, and that's basically it. Consumer staples is still kind of lagging. Technically, it's in a downtrend, but it's just a pullback downtrend in context of an uptrend. And energy sector is dragging down a lot of the markets. So flow of money into utilities and basic materials primarily, and out of energy sectors. And you could say financials is probably lagging as well. So there's our flow. Now we know that there is a lot of earnings that are going on right now, and I don't dive deep into earnings. I gotta expect everybody's gonna have to do your own due diligence on it. A great place to find earnings news, just go to investing.com and just click on the calendar section and come down and click on earnings calendars, and it will list all the different companies that are having earnings down here. Obviously not today, but if you look at next week going forward, there's going to be an enormous amount of earnings coming out. So if that's interesting to you, if you want to know where to find them, that's where to find them. There's just too much to talk about in terms of earnings. But I will take a quick peek at the economic reports. Not too much news this week, some minor stuff coming out, some speakers, FOMC speakers coming out, and then you got jobs openings. This one comes out on 7 a.m. on Tuesday, that's Pacific time, and I would expect a bigger number with the Christmas holidays coming up. Typically, these numbers begin to really jump around November, but I'm thinking because of the lockdown and now they're testing more obviously, but they just found 100,000 new coronavirus cases in a single day, which is the record high, and many countries locking down again. God, I hope they don't lock down here. I think that's affecting the job openings for this year, this Christmas season. Core CPI comes out 5:30 a.m. on Thursday. Initial jobless claims 5:30 same time. Thursday morning is going to be a busy morning with a lot of information coming out pre-market. Oil inventories in, nothing much Friday. Yeah, PPI on Friday. Some Fed speakers, but nothing much. So not an incredibly busy week in terms of earnings or in terms of economic reports. All right, so taking a look at the chart picks for the week. And once again, I want to mention that if you're liking these videos, please click the subscribe button and the little bell icon, send you notifications. If you think they're good, hit the like button. I do appreciate your support, and anytime you share these things greatly aids in the growth of this channel. Also, remember that trading involves high risk, and everything I'm showing here is for educational purposes. In no way in any sense are these recommendations to take trades. This is all for educational purposes. Okay, so let's get started. Lululemon. Now, again, this is an aggressive setup. Okay, remember we have the indexes in resistance. So Lululemon is more of an aggressive type of setup. We got back above the moving averages, but we really haven't had supporting evidence to say that they're going to stay there. There are some resistance points up above, but we broke outside of that trend line, which is what I like to see. But I would never think of entering into this trade unless I got a substantial pullback. Now, the advantage here is we have a downtrending line here. We have confluencing moving averages, and a pullback to that area would lead to a potential nice breakout. So that's what I'm looking for, that pullback for an entry, a low risk entry. And then, so there's different ways we can do this. Obviously, a more aggressive trader may be willing to buy as it's going down, buying as it's going down, buying as it's going down. A more conservative trader may wait for that candle. If I can draw this for you, see, let's see if I can do this, give this a shot. May wait for, oh, wrong one. May wait for a candle to start turning white, that should be white, before they enter and buy it as it's starting to prove that they're holding. And then the really conservative trader may actually wait for this thing to break out before they decide to enter. Now, there's another type of entry as well, which would be the kind of breakout and then the retest of the breakout. And this is an even more conservative type of entry here. So it really depends. We haven't actually established an uptrend. All we've done is broken past prior resistance. We've had some pretty nice buying pressure on these candles, except for that last Friday, but that's profit taking as everybody's a little bit nervous about what's going to happen over the weekend. So that's an opportunity. But again, remember, this is a more aggressive type of entry right now. We don't have that confirmation. We don't have this breakout to a new high saying that, hey, we're going to start the new uptrend. And even if we do, we still got resistance overhead. So be aware of that, okay, folks? All right, let's take a look at our next one. The next one is Walmart. Walmart, again, has a pretty similar pattern. It's approaching that resistance. A lot of buying pressure, even on Friday, which was impressive. It actually did have a bit of a challenge once it got above these moving averages, actually holding. They were trying to drive it back down, drive it back down. Then finally, the sellers gave up. You know they're going to come back in over here, though. If they're willing to sell it here, when it gets back up to this 146, 47 area, they're going to push it back. So there will probably be an opportunity. This box, I'll just correct this really quick here. This box could technically be a little bit higher, maybe right up there. Um, and then again, though, we don't have that confirmation. So we got to be aware that we need this to happen. This has to happen. It's got to happen. So the aggressive entry on the way down, the conservative entry on the way up. At least by entering with a conservative entry, you then have a place to put a stop loss that's going to be more accurate, or maybe you can make it a little bit looser to make it a little more accurate. As it starts going down, there's no place to put a stop loss. You got moving averages, sure, but they'll wick below moving averages and push back up all the time. Look what happened over here. So, you got to decide what type of trader. This is part of building your trade plan. This is all building trade plan strategies. What type of trader, you want to be if this is the way you want to trade aggressively or conservatively. Now, here's the thing. The index markets trading into resistance, kind of hesitating. Will they push through and just plow through like they're not even there? It's quite possible. But when they're in resistance, you can expect some sort of pullback. And often the better way to enter, if a person was doing this on a simulated account to practice, would be to take a partial position on the aggressive entry and a partial position on the conservative entry and see what happens from there. That way they're not putting all their eggs in one basket. All right, so that's Walmart. Once again, great trending stock and a beautiful uptrend. It does tend to break the moving averages, consolidate, and then continue. Breaks, consolidates, continues. Sometimes it gets under them and then breaks above and then continues. So, we've just came out of one of those patches where it broke below and now we're pushed back above. So I would expect it will probably hold above. We'll see though. Nothing's ever for sure. They're all best guess estimates. Traveler's Companions. Okay, so Travelers, TRV. Once again, really nice strong uptrend. We got a supporting trend line here. We got some moving averages, but it just kind of ran away. There was a great entry yesterday or 2 days ago, Thursday, but it did kind of run away. And it's come up into this resistance. Now this is the second time at this resistance. I wish I had noticed this sooner, but that was right before the election. I wouldn't have taken it anyways. That beautiful pullback and then that opportunity there, and there. But as it stands right now, it's in a position where it might have another pullback, another day of pullback or two, and if so, that's an opportunity. So what we can expect is this 8 moving average, which has been holding. It'll probably hold again, wick under, and push above. I don't see it gapping up in the morning. Uh, it's possible it could, but I would expect to wick down and gap up. And if that's the case, if it gaps up, hey, you know what? It's a missed trade. Never cry over spilt milk. I don't mind if I go with a few more days with no trades on it. I think I'd be quite comfortable spending the next half of the week at least with no trades on while all the minutia works out about this election. Last one, Fedex. Fedex is just rock solid. Look at this. Unbelievable, beautiful chart. Could have been a longer term hold. Obviously, kind of priced up now, but look at the earnings. Wow, 487, 253. I mean, compared to before, 141, 253. Well, pretty good. I mean, just crushing it. 65-cent dividend on this stock. Again, it did break down below that 21 moving average and it pushed back above. Sometimes this like winds up orders and then boom, and it goes for its next big run. I'm not saying that's exactly what's happening this time. We don't know for sure. We are above the 50, the 50, 21's above the 50 and the 8's above the 21. So the technical trend is still up. Don't like the wicks on these candles last couple days. Don't like those wicks forming on those candles. But it would make sense because of where the market is. The other thing I'm not happy about with this one is it's kind of lagging. It hasn't really gotten up to, considering it's such a strong stock, I would expect it would have outperformed the market, but on a percentage basis, it looks like it's kind of below where it should be in terms of performance wise, relative strength wise. So maybe we get a pullback, and I would be willing to look at this for a low risk entry if I get a pullback to one of these continuing moving averages, and even or the trend line. I'd probably be willing to add a little and add a little into that move. Probably have to be a more aggressive type move. But remember, we have this pullback, we have this rally. We do not yet have the second leg down to prove the uptrend. So again, this is a more aggressive type of setup. And if this is something that you're not too familiar with taking these types of aggressive setups, then do it on a simulated account. And that's the best way to do this. Practice it. Don't ever, just take trades because somebody else is doing it. Make sure that you make it your own. Use your rules. Figure out your risk. I may be willing to risk $6 or $7 on this one. Are you willing to? Maybe you need to move down to taking mini option setups on these, or maybe taking in shares, a few shares just to practice it and doing a simulated account to practice it. So there's no risk. And that way there, you're not putting yourself in an emotional position when taking these trades. All right, that kind of sums it up, folks. I hope you've all been having a great week. I hope that the election didn't harm you in any way. I know there's a lot of crazy stuff going on, but aside from that, if you have any questions or anything, I have not been checking my chat at all. This is hunting season, so I'm out there trying to get a moose every day. I just got back and I'm going back out. For the next, I only have a limited time to really fill that tag, so I'm getting out there. But if you have questions, just type them in, and I promise I will get around to them eventually. Thanks very much for watching. I hope you enjoyed it. Again, trade safe. Always manage risk. And if you like the video, please click the like button. All right, stay green, everybody. We'll talk to you on Tuesday.